Hey, what's up guys, hope you guys are doing good. So in this video I'm gonna cover my weekly trade analyzation, every single week at the Saturday or Sunday. In the weekends I analyze the whole week, my performance. I analyze my journal and see what is the major problem that has been going on with me. So this week uh, I did it, and let me just show you what I found out that was going on with me. And I had these significant losses, in a row. Not even a single trade was win. So let's see what is the problem that has been going on with me and what has I been doing. Okay, so let's see. So this is 19th October, Saturday. I did my analyzation of what is the basic problem that has been going on with me. Okay, I you know observed my journal and find out the key problems that has been going on with me. So problem here, as you can see, 19th October, Saturday. Problems. What is the problem that has been going on with me? Keep getting stopped out. I've been keep getting stopped out this whole week. Not even a single trade was win. So let's see. The first problem was the PDRA understanding. PDRA understanding means the point of interest. I was kind of bit of like which POI I should choose. Like, I don't get a bias by analyzing the daily, weekly, or monthly or high time frame. I came to, like, I always start with the 4 hour, 1 hour, 2 hour, and mark out my point of interests. Now here is the case that I mark out my point of interest. Now I usually design my bias on the basis of the reaction from those POIs. I mark out liquidity above, you know, below, and I wait to see the reaction, the market structure shift from those point of interests, and on the basis of that, I take the trade. So the problem was with me was I wasn't able to understand which POI is going to be the right one to take, right? Because if you mark out a like there is a lot of point of interest, like there is a if you mark out any point of interest, like if an order block below, uh, let's give you, like, there always going to be a lot of other uh, point of interests as well, right? There won't be a single, like if the price is pushing higher, there will be a lot of point of interest, one by one. Some price will have tapped in and some price didn't tapped in, right? So which one to take? And then 1 minute market structure was leading to fake outs. Now I think this is the very big problem was with me that was going on, which is, I was watching 1 minute structural shift from those point of interest. Now 1 minute is quite noisy, and it you sometimes, the what I see in my journal, that I got stopped out only because of this 1 minute market structure shift. This was, sometimes was leading to uh, you know sometime it was leading to fake outs, like market did structural shift, then again came in, took down the liquidity below, and then pushed higher, and I got stopped out in that manipulation, that inducement. And if I go to the 5 minute, that was just nothing more than a rejection. So this is what I've changed as well. And there is something with my emotional, this was an emotional problem, which is fleeing flickered while pushing the button. Whenever I have this series of losses, so whenever I used to push the button, my mind used to do bullshit things like, oh, you're gonna have loss, this sort of thinking, this sort of emotional imbalances was coming. So that only means that I still don't have that kind of emotional regulation that a trader should have, right? So I have to work on that. So what is the solution for that? Like, keep getting stopped out, right? The PDRA solution. What is the solution that I have found out was using the 9:30 open. Now 9:30 Indian Standard Time. This was be New York 12, right? When the first daily candle opened. You can see 9:30 IST. is the true daily open. So the basic understanding is that in the bullish London, in the bullish scenario, if the day is bullish, so you're gonna see London usually make the low of the day, and if the day is bearish, then you're gonna see that London usually make the high of the day, right? That's ICT concept. He has told it before in his market primer course. And you see, the first to make the low of the day, mitigate some sort of liquidity, it's gonna manipulate. London usually gonna make the low and then reverse from there. So where it's gonna go to some sort of liquidity and then shift its structure and go. And this is where I wanna trade. Like I wanna trade that point of interest. Market come, shift its structure and go higher. Okay, in this case, this 9:30 open would give me a brief understanding that I only take, I mark out my 9:30 open and check below liquidities and above liquidities and ready to see reaction from those liquidities. Okay, and if price open up, do a little bit consolidate and then push lower, then I have an understanding that then I need to see which liquidity market is going to, right, and then see this shift from there. Now this shift will confirm that we have shifted our structure. Now for the rest of the day we're pushing higher from, we take down some lower liquidities, now we are pushing higher. Sorry for the noises. And this is what I've just changed a little bit. Before I wasn't doing anything like that, I was just marking POIs, and now I mark it in the basis of 9:30 open, 9:30 Indian Standard Time open. Okay, POI. And the second solution is the market structure shift solution, which is the most important thing for me. And I find out that only seeing the 5-minute structural shift is much better. Okay, the 5-minute structural shift on the basis of 4 hour, 1 hour, 1 hour point of interest is much better. Like if you're looking at something daily or weekly, like 15-minute, 1 hour structural shift, 30-minute structural shift are good, less noisy, proper structural shift. In that perspective, if you like take point of interest like 1 hour, 4 hour, okay, 15 minutes when you refine it, that's when seeing the 5-minute structural shift is much better. That I have analyzed all those trades that I did, that I find out seeing the 5-minute structural shift could have stopped me getting entered. Okay, because in the 5 minute where I'm seeing that 1 minute has done the market structure shift, in the 5 minute there's just nothing more than some rejection. Price go into that some sort of liquidity and reject it from there, which in 1 minute looking like a market structure shift, and which it's not. Okay, and only seeing the 5-minute time frame market structure shift, then marking out my order block, FVG, premium and discount. Like price has like, let me, what I was like, is something like this, like went into a liquidity and then do this, then the structural shift. Now when you have this structural shift, you always gonna have your premium and discount understanding, you are gonna have your fair value gaps, you're gonna have your order blocks, breaker blocks, and on the basis of that. Okay, so what I'm doing is I'm seeing, like, once market is, I'm gonna show you in a while, let me just tell you. And second, using the 15 and 9 EMA crossover. Now this one I find out that 15 and 9 is short-term trend. It shows you the short-term trend. Obviously I'm only seeing it as a confluence. I'm not trading on the basis of that. I'm only seeing it as a confluence, that the market's momentum is changed. Okay, this is showing the short-term trend momentum, the 15 EMA, the 9 EMA showing the short-term trend momentum, and I want, when these things crossovers happen during a market structure shift, this is telling me that market has changed its momentum. It could be short-term, it could be long-term as well, nobody knows, right? But that crossover in the 1 minute time frame, I'm seeing the crossover in 1 minute time frame. After the, I'm gonna using the 9 in 1 minute to confirm the 5-minute structural shift is correct. Why? Because you see the 5-minute structure shift done, and you came into 1 minute, you see that market has done the crossover. Now this shows what? The change in momentum, that we are changing our direction, obviously from a high time frame liquidity point, which is the number one most important thing, and then the 1 minute retracement into the 5 minute point of interest, which I have just told you that this point of interest, I want that 1 minute come and usually form those things that I want: continuation perch, turtle soup, unicorn model, things like that. And when price retrace in 1 minute, in the 1 minute I'm taking the trade. Okay, in the 1 minute I'm taking the trade. Now sometimes if I think like uh, I'm not quite happy with the way market is retracing, it's too consolidating, then what I'm gonna do, I'm gonna put another layer of confluence there. What is that? Once market come into this 5 minute time frame POIs, when it's not clear, absolutely, when market is coming into this 5 minute time frame POI in the 1 minute time frame, I would like to see another 1 minute time frame market structure shift, which will confirm this 5 minute time frame POI is getting respected in 1 minute as well. Then my usual way of entering. So by analyzing my weekly journal, this week's journal, I find out this is the problem that has been going on with me, and that's how I have changed, not changed actually, done some refining. Now I think everyone should do it. Check their and not just journal, like I took a trade, make a journal and never open it after that. You have to come every single week, or the way you want it, come and see your journal, look what you've been doing wrong, what is the major thing that has been going on in your journal, and then change it. I know, this is what basically journal is for, right? That take the trades, then you journal it, and after that you come and see what is the major problem that has been going on with you, right? And this is the major problem that has been going on with me for past weeks, right? And I have changed it. Now I'm gonna show you a little bit of like what a little bit of backtest that I've seen, the overall approach that I've taken, right? So this is Friday. I think we have to go trade in Friday maybe, and we got a loss, right? And I think this is Euro USD. Let's check out Euro USD. Okay, so let me just cut out all the point of interest. I've already marked. Okay, I've back tested, so that's pretty nice. So this blue line here, this is our 9:30 open. Okay, let me just make it black. This is our 9:30 open. This is the true daily open. You can see this is New York time frame 0000. So I have marked the opening of the candle. Okay, now this is gonna give me a understanding that if the day is bullish, I would like to see that London come mitigate some lower liquidities and then shift to structure and push higher for the day. Or if it's bullish, I would like to see that price after opening of the 9:30, price went inside some higher time frame liquidities and then push higher. So as you can see, after opening of the 9:30, we have now what point of interest do we have here? We have this huge imbalance in 1 hour, and we have a we had our order block, like you see, take out the liquidity, pushed higher, right? And we had an imbalances. We have an imbalance here as well. Let me just mark it out. We have an imbalance here, and this is another imbalance as well. Now you see, after opening of the Asia open up, usually Euro USD Asia don't expand much, and this is some nice expansion inside this fair value gap. Now I'm waiting for London, what London is doing. I'm a London trader, so I would like to see the price action or the characteristics of London, what London is giving to me. Okay, this is Euro USD JPY. It's not JPY, right? So it's Asia. Doesn't make any sense for me. Sorry for that. And open up Asia 12, sorry, open up of London 12:30. What happened? Price came into this order block, sorry, this fair value gap. Let's see in the lower time frame what happened after opening of this. Okay, so as you can see, after opening there is some patchy price action. You see, this is when the 5 minute time frame like gonna help me out, right? You see consolidation now in the 1 minute. I would definitely get in some sort of fake out and will get stopped out. That has been going on with me, right? And how the EMS is working as well, I'm gonna show you that as well. Just be with me and short. Let me show you what's going on. Open up, price came down, see, pushed kind of shifted structure, and again here. So you can see like came out, tapped into this. So I was like ready to take any setup from here. As you can see, it came out. Now this was the last candle that has came in, right? So I would like to see that price break above here. See that? That's the structural shift concept. Price did go, took out the liquidity, pushed from there, shifted the structure here, right? Now if it shifted the structure here, okay, let's see what's going on. Now I can think of, okay, let's see what's going on. But you can see this EMS is already been kinda catchy, right? But let's see what is going on. I have my shifted structure here, so I would like to take a trade once price come in into this here. But if you just go to the 1 minute, if you just go to the 1 minute, what you can see, you can literally see that price didn't came in. Okay, I'm only taking trades when I'm only taking sales in premium, and I'm only taking buys in discount, right? Price didn't came in. Okay, instead of that, price gone and mitigated that and pushed higher. So now I am kinda, bro, something is going wrong, right? I like something is going wrong. It's not like the way I want it, right? So what can happen? Let's see. Again gone in, pushed down from there, again took out this liquidity, see, and this was the last move that I wanted to see, right? There is an order block as well, so I'm just waiting. You see how price came in, took out this liquidity here, market make some liquidity, market made the sell side, took the sell side, and then finally shifted the structure here. See that? Shifted the structure here. What do you have? We have all this liquidities here resting, right? We have all this liquidities resting here. Market was creating these liquidities, and then market finally took out the sell side that was created, and then market shifted its structure quite nicely. See that imbalance? It's an impulse move. If you see the volume was coming as well, right? Yes, the volume, see, the volume was coming as well. Now this is what I wanna see in, when the displacement happen. Fair value gaps, long big candles, and volume coming in. Then it came out. We didn't directly take out the liquidity. We came to retrace. See that? Now it's time for me to go to the 1 minute. Now we have shifted the structure here, right? Let me just make it thick. We have shifted a structure here. 1 minute. Now it's time for us to go to the 1 minute. Maybe just mark out the 5 minute time frame point of interest. We have order blocks, we have fair value gaps, right? And we have this huge fair value gap that I would like to see that price holds from there. And you see that prices has been consolidating for here. Now I would like to now apply another layer of my confluence. Now let me show you. I just told you what I do. Let me just show you how I do it. Damn, fuck these noises, bro. And the 1 minute. 1 minute. Yep, there it is. What the chart? What the fuck? Where are the charts? What the hell is going on? My PC has gone a little bit slower. It's not that high performance. Whatever. Whatever. You can see we have shifted a structure here. The 5 minute. The 1 minute has already shifted structure. You can see, and now the 5 minute time frame has shifted structure. Nice impulse. Coming our premium and discount idea. We have our discount PD array, and you can already see the EMA has crossed. showing us what the momentum has changed, the trend that has been established has been changed, right? Now all I just would like to see a impulse, a engulfing maybe, or anything. Now the price was consolidating for some time, so I'd like to see another, impulse move, things like that. So what I'm gonna do, market came in, nice impulse, and as you can see, price engulfed the candle, CISD in a single candle, engulfed, breaked here, pushed higher. Then anywhere from here I would be able to take a trade. Like my usual setup is, I could have taken my trade on the respect. Once this fair value get respect and the price closed inside the previous candle range, which I call the continuation purge, maybe I can just enter there where my SL would be. I have 2 and 3, maybe, I could have set my SL below this one as well, below this order block if price come in, right? But that's just too much big, so maybe I would set my SL below this, right? If I just mark out the premium and discount here, maybe I basically opening of this candle, let's see what happens. And then you can see our usual target is 1 to 3, so maybe I could have made that, right? And if I could have set my SL here, then obviously I would take out at, I would always target this min threshold of this big fair value gap in hourly, and you can see it took some time, but eventually it's done. Now this is what is, by doing these simple changes I have done, a few by changing the small changes, I think it's gonna help me out a lot. Okay, so let's see what happens. Let's again live trades and see what happens by using these ideas that I have put in, a little bit of change, and so let's see what happens. So thank you for watching. That's all for today.